We're at home in crypto winter. Winklevoss twins launch crypto trading app. Cryptocurrency trading platform Gemini founders Tyler and Cameron Winklevoss have launched a mobile crypto trading app together with a new investment vehicle, according to an official blog post published December 11. As the post outlines, the new app allows users to buy and sell crypto, and monitor real-time and historical crypto market prices for Bitcoin, BTC, Ethereum, ETH, Litecoin, LTC, Bitcoin Cash, BCH, and Zcash, ZEC. Users can also see the total value of their current portfolio, and set price and percentage value change alerts for their chosen coins. Further functionality includes a recurring buy feature, as well as support for a newly launched investment vehicle dubbed the Cryptoverse, a basket of cryptocurrencies, weighted by market capitalization, to be bought as a single order. In an interview with Bloomberg published today, the twins struck a bullish tone in regard to the recent crypto market slump, Tyler stating we're totally at home in winter, and his twin Cameron adding that it gives us time to build internally, and refine and kind of catch our breath. Cameron contextualized the new app as a bid to reach out to retail investors, telling Bloomberg that a lot of our decisions have perhaps given off a perception that we're more institutional-based. The reality of the situation is that we have a diverse customer base, and the retail story is just beginning. The twins also revealed their 2019 goal of expanding to the Asian crypto market, where they will face stiff competition from a thriving exchange industry that includes the likes of Bitfinex, Binance, and Huobi. Gemini's expansion plans have also been rumored to include possible entry to the United Kingdom market, as reported this September. The twins, stalwarts of the crypto space, have had a checkered history with regulators. Successes include a recent seal of approval from the New York State Department of Financial Services, NYDFS, to launch their own US dollar-backed stablecoin, the Gemini Dollar. Gemini also obtained insurance coverage for custody digital assets from lending services firm Aon, which will complement Gemini's already available Federal Deposit Insurance Corporation, FDIC, coverage for US dollar deposits, in place under the New York State BitLicense framework since 2015. The twins nonetheless faced a high-profile setback this July, when their application to launch a Bitcoin exchange-traded fund, ETF, received its second rejection from the U.S. Securities and Exchange Commission, SEC. Most recently, the twins have made crypto news with a lawsuit they filed against Bitcoin Foundation founder Charlie Shrem concerning an alleged Bitcoin theft dating back 6 years. As of press time, Gemini is ranked 51st among crypto exchanges in terms of adjusted trade volumes, seeing around $16.5 million in daily trades. Crypto platform Qubits begins insolvency procedure after alleged hack, locks users' funds. United Kingdom-based cryptocurrency payment platform Qubits has filed for administration following a sudden outage that locked customer funds, a company press release revealed December 11. The act of filing for administration means that an insolvent company has appointed an external administrator in order to act on behalf of its creditors. Qubits, the trading name of legal entity Dougal Limited, claimed it had lost funds worth €29 million, $32.8 million, to fraudsters in February 2018 that it was unable to reclaim. Now, Dougal has brought in administrators to work with those who are owed money by the company and to collect monies that are owed. Our goal is to achieve the best outcome for creditors generally at the earliest possible date, one of the two newly appointed administrators Steve Parker commented in the press release, continuing. Dougal's current position is secure. Investigations are proceeding and we will be writing to creditors, formally, this week. Both of Opus Restructuring and Insolvency, a part of Opus Business Services Group, Parker is joined by Trevor Binion to work as joint administrators for Dougal. Qubits users had raised the alarm Monday after the platform's website went offline. At the time, the company's Twitter account claimed the reason for the downtime was maintenance. The website subsequently went from claiming services would be right back to a generic error message December 12. The website now shows a copy of their press release explaining the administration procedure. Some users reacted coldly, claiming they had already been waiting several weeks to withdraw funds. Opus Business, now in charge of Qubits administration, has not responded to a request for comment on users' locked funds by press time. The February episode focuses on 3 Chinese traders who allegedly purchased Bitcoin, BTC, on qubits via Malta-based payment processor PaySecure Online Limited, regularly known as PaySec. The company allegedly never paid Duga the fiat due, leaving the company with debts totaling €35 million, $39.7 million. In August, a Maltese court upheld a garnishee order, third-party order, filed against PaySec, which Duga openly claims colluded with the traders. Since February, Duga has made every possible effort to recover these funds, the release continued. Unfortunately, contrary to expectations, these efforts have been unsuccessful up until now. In a separate controversy, an analysis of Duga's activity on LinkedIn revealed its payments coordinator Eloise de Bono is an endorser of infamous alleged Ponzi scheme OneCoin. Its head of crypto business, Max Krupyshev, left the company in November before its financial woes became public. New Zealand, financial authority blacklists another 3 crypto platforms marked as suspected scams. New Zealand's Financial Markets Authority, FMA, has added 3 more crypto platforms to its blacklist that warns about scams, a release by the FMA reveals Wednesday, December 12. One Life Network Limited and its associated entity OneCoin Limited were added to the list because they bear the characteristics of a scam and promise unrealistic returns. Moreover, the FMA has learned that the mentioned companies are holding promo events in New Zealand and offering investments, thus breaching the country's laws by acting as unregistered financial services. Another crypto company, Bitcoin Revolution Limited, was suspected of being involved in a scam as well. As Finance Magnates reports, the crypto trading firm made suspicious claims on its website, such as earn up to $1,000 per hour or more, starting today. Moreover, the FMA recalled its October warning, reminding the public that Bitcoin Revolution Limited falsely claimed that the country's current or former prime ministers and treasury officials were investing in Bitcoin, BTC. As Cointelegraph wrote before, in late 2017, former New Zealand Prime Minister Sir John Key was rumoured on social media to hold $300 million in BTC from his initial investment of $1,000. Key later denied this information and said that the initial news was posted by a fake website pretending to be the New Zealand Herald, the largest newspaper in country. New Zealand's authorities are already closely following other crypto scams. In September, the country's police warned citizens about online scams in general as an investor lost $320,000 New Zealand dollars, $213,000 to crypto fraudsters. In October and November, the FMA also blacklisted several crypto-related companies, mostly for promising unrealistic returns or failing to get a required certificate of incorporation from local authorities. Binance tackles cryptocurrency misinformation with multilingual educational article bank. Cryptocurrency exchange Binance has launched a collection of educational content comprising almost 500 articles in order to provide unbiased information about crypto and blockchain, a press release confirmed December 12. Binance, which regularly tops the list of the world's largest exchanges by volume traded, will initially support 15 languages via the project. The launch and development is a product of Binance Academy, the exchange's dedicated education arm which itself began operating in August. Education is the integral pillar to proliferating crypto and blockchain usage, Ted Lin, Chief Growth Officer at Binance commented in the release. Lin noted, "With Binance Academy, our goal is to provide an entirely neutral platform with quality, unbiased, educational information. While it remains unknown what specific information will be covered, topics will include blockchain, security and economics, as well as useful tutorials and guides," Lin added. The decision to launch an informational resource comes as even the topic of Bitcoin's own identity continues to come under the spotlight. Following the turmoil of the Bitcoin Cash, BCH, hard fork last month, the altcoin's proponents, notably news and information resource Bitcoin.com, continue to assert that Bitcoin Cash is the real Bitcoin, an angle which has earned the publication criticism in the past. Developing such resources has also become an occupation of various other entities in the cryptocurrency industry and beyond, October seeing a government-endorsed scheme by Gibraltar to develop blockchain education courses. Ethereum co-founder Joseph Lubin's Consensus, a blockchain startup and incubator, in partnership with online education platform Coursera, along with Oxford University professors, have also put forward separate blockchain educational plans of their own. SEC Chairman expresses optimism about DLT investment opportunities in Senate testimony. United States Securities and Exchange Commission, SEC, Chairman Jay Clayton has said this week that he is optimistic that developments in distributed ledger technology, DLT, can help facilitate capital formation. Speaking as part of a testimony before the U.S. Senate Committee on Banking, Housing, and Urban Affairs, published on the SEC website December 11, Clayton added that DLT offers promising investment opportunities to institutional and retail investors alike. Clayton's testimony spanned various aspects of the SEC's oversight, including its regulatory and policy agenda over the past fiscal year as well as its new strategic plan, and 2019 near-term focus. Within this context, Clayton emphasized the agency was focusing a significant amount of attention and resources on initial coin offerings, ECOs, distributed ledger technology, DLT, and digital assets. In regard to his self-declared optimism about the investment opportunities provided by the new sector, Clayton outlined a range of the agency's initiatives that aim to foster innovation and protect investors as part of a balanced regulatory approach. These include guidance from the SEC's Corporation Finance Director, Bill Hinman, on how to evaluate whether a given digital asset is deemed a security under U.S. federal law, and the appointment of an associate director, Valerie A. Shepanik, in the same division to serve as a dedicated senior advisor for digital assets and innovation. As part of its internal crypto regulatory coordination efforts, he noted the SEC's creation of a dedicated strategic hub for innovation and financial technology, FinHub, this October, which he characterized as a sign the SEC's door remains open to those who seek to innovate and raise capital in accordance with the law. Clayton made further reference to the agency's attempt to coordinate interagency oversight with other regulators, and to proactively issue ongoing public statements in regard to ECOs and cryptocurrencies, most recently this November. The agency chairman closed his discussion with a mention of the unfortunate case of bad actors that prey on investors' excitement about cryptocurrencies and ECOs to commit fraud or other violations of the federal securities laws. As reported earlier this week, Clayton has remarked that ECOs can be effective, but require regulation and compliance with securities laws to ensure they offer participants the same degree of investor protection as in traditional equities and fixed income markets.